Right, boys, welcome back to another trade recap. This time it is on NQ. This is on the futures market. Now, I'll be real, I've only recently just got into futures, and this was on an evaluation. It was not on a funded account or anything like that. This is literally my first proper week trading futures. Last week I did some forward testing and I didn't really take anything. This week is my first week trading futures, but I back tested the fuck out of it, and I've been trading for 3 years now, so I kind of know what I'm doing, right? So coming into market open, why did I take longs? And this was a day that, by the way, I've been on Instagram. I've seen like people just did not trade today. Like no one took trades today. No one took longs. No one took shorts. People maybe took shorts. I don't know, but no one took this long. Because it wasn't the highest quality of longs, if I'm being honest. But it was still there for me, and it followed my rules, so I took it, right? And that's one thing that you've got to learn when you trade is that even if you might have a feeling that you don't want to take the trade. There might be some kind of itch that is a bit like this probably isn't the best thing to do. But if you look at your rules and every rule is ticked off, you have to kind of take the trade, right? Because you're messing with probabilities otherwise. Okay, and again, that's something that is taught inside of Woke Effects. So again, if you want to get involved in Woke Effects, you can book a free discovery call with one of the mentors. Drop me a comment, drop me a message on Instagram, links in the description, and we'll get you started. I think you might also be getting a free funded account if you join the call. It's not a challenge account, it's a free, like an instant funding account. So that's pretty, yeah, I'd do it if I was you. Anyway. Boy, this bitch ain't, she blew my shit up, chill. Right, so coming into market open, what did I want to see? First off, start on the daily, the 4 hour even. Well, no, we can start on the daily. First off, on the daily, we are at all-time highs, right? We are just at all-time highs. We're ripping higher. We're literally trading IRL to ERL every single fucking day. And it's quite a difficult market to learn in, right? And get into futures. We're just ripping. For the past, since the 1st of April, we've ripped. Okay, this is the market you want to be trading. This is very difficult, but trades are still possible. So, of course, I'm bullish. Okay, people are looking for shorts. I get it. But why would you short all-time highs when every day we're making all-time highs, right? Doesn't make sense. However, I will say I was looking for shorts at the beginning of session. So, coming into market open on the 4 hour, I'm clearly bullish. We are trading away from this 4 hour fair value gap just here. However, we have an unmitigated 4 hour just here with, and beautifully aligned, a 4 hour order block just here. Okay, so this order block as well, this is a higher quality POI for price to come into, to then have this, then come into this one. Why? Because it is at a more discounted price. Now, it is not in the discount of the swing. Okay, but there is also scope, if price did come into here, we could maybe tap the discount go up. So it's at a better price than to distribute from here. But as well as that, you've got to understand that all-time highs, we tend to just leave these gaps, right? If you look back at your past kind of thingies, there's so many gaps that we have just left along the way. Okay, now eventually we will come back to fill them. Like you can see, these two gaps were left for one, kind of, that's 2 3, that's 2 days, well, 1 day, 2 days. So 2 days it was left, and then we do come back. So we are retesting, and we're slowly starting to see price slow down a little bit compared to this, right? So it makes more sense price coming to here. So now I go to the hourly. What do we have on the hourly? We have an unmitigated hourly fair value gap with an hourly intermittent low, just here. Intermediate low, just here. Resting above the 4 hour and hourly fair value gap. And when price is this close to it and we have this huge rejection wick, okay, I'm expecting price to run through this, okay? And if price runs through this wick, well, then why am I expecting price to, go next? Down here. Okay, so that was kind of my thoughts coming into the open, all right, of the market today. Now, this was open, it's 2:30. Okay, so we can let price play out, does whatever it wants to do. Okay, and then we put in this low. This sweeps this low right here, pre-market low. On the 5 minute, I'm looking down and I see, yes, we have kind of taken this low by a tiny bit, but we have this accumulation happening and we have this AMD happening. So I still kind of think that this is accumulation. We're getting a manipulation coming to a distribution. even though we swept the low here, I'm not expecting price again to rip here. I'm expecting it to come down a little bit lower. So I still wait, and I wait, okay, and then we boom. We put in this low right here. Now at this point, when you're this close to a gap, I'm expecting price to fill it. As well as that, we had these equal lows. So this is where my bias switches slightly. And this is okay to happen. Overall, on a daily and a 4-hourly and an hourly basis, I'm expecting price to be bullish, right? But on an intraday basis, on a 15-minute kind of time frame basis, what makes most sense for price to happen? Does it make sense for prices just to rip to all-time highs from here? Or does it make most sense for us to potentially get a retracement at market open and then trade into here and then rip? Okay, I would put all my money on the second option every single day of the week. Okay, so once we create these equal lows, right, relatively equal lows, we have this hourly intermittent low above the 4-hour fair value gap, above an hourly fair value gap, at an order block, at a more of a discounted price than up here. Again, we're still not in the discount, but that's okay. Now I'm expecting price to, like I said, trade into here, and then we can get some longs. But I go on the 15-minute, okay, just before market opens, and what have we created? We have this unfilled 15-minute fair value gap right here. So I'm now looking, okay, how can I get shorts towards here? It could be that market opens straight away and we just rip, and that's absolutely fine. And then I look for longs in this area, or we see price trade higher and I catch shorts to this area, and then we see price take longs, right? That was my kind of mindset going into the day, and it changed very quickly, right? Over here, my bias is very long. Now I can maybe catch a quick short to then long in a sense. So we go on market open, and you can see we come down a bit and we rip, right? And we did print in an SMT with ES at these lows just here, right? So ES took the low, MNQ did not take the low. Now, there was a setup, there was a long position to take here, okay? There was a long position to take here. What was your highest time frame inversion? You're probably, well, I know some people took it straight off this 1-minute CISD, okay? Like SMT at the low, CISD, stops here, and then targeting these relatively equal highs over here, right? Beautiful trade if you took that. The only issue is, again, there was no confirmation that this S&T was going to hold. Maybe with this candle here, and that was a beautiful long to take. But it's the first minute of market open, right? I want to be a bit more patient because there's nothing really confirming to me that this is thingy, especially when we have this 15-minute fair value gap that we just traded into. So I let price play out, and we just rip up higher, and we rip up higher, and we rip up higher, and then we take London highs. Okay, this is where bias switches for me. And I'm no longer looking for shorts. Why? The POI I'm looking to take shorts from gets rinsed. What else do we have? We had this AMD be confirmed, okay? We had an accumulation, a manipulation, and a distribution to the upside. So this setup over here was pretty good if you did take that, right? But again, with these lows, for me, just was not for me. So once we have this rip to the upside, and we've closed through this 15-minute gap, what are we now respecting? We're the 15-minute bearish gap. We're respecting bullish momentum, of course, and we're disrespecting bearish momentum. As well as that, look at this fucking high. Look at this candle. This is a recently with futures, like on NQ, market open candle has been insane. That's a 175-point candle. It's insane, right? So I'm a bit like, okay, probably not going to get a setup today. It is fine, and that's where I saw a lot of people just turn off their charts, and that is absolutely fine to do because how can you trade this? It's very difficult. Now, once we set London highs, okay, first target's gone. But then what we do next is really fucking. This is why I saw a setup. We have Asia high untapped. Okay, we don't really have an SMT because ES and NQ did two different things. Okay, during Asia and London, like NQ came down, ES went up, oppositely correlated for some reason. But what have we left? We've left relatively equal highs down here. Now, you're probably thinking, they're not equal highs. Equal highs do not have to be like pitch perfect equal, okay? If the high, let's say, this high's over here, and then this one's over here, you still have stacked highs. You still have relatively equal highs, maybe a little bit higher, but you still have relatively equal highs. So they were my relatively equal highs at Asia highs. The reason that they're at Asia highs is why I took this step. If they were not at Asia highs, maybe I probably wouldn't have taken this and I would have let prices do its thing today. But because they were at Asia highs, I took this trade. Now I saw people longing from this 1 minute gap. Okay. Now there's nothing wrong with this except zoom out of your charts. Okay. What we have? We have a 15-minute gap forming. What else do we have? We have 3 unfilled 5-minute gaps forming. Okay. What else do we have? We are extremely premium. Why would I take a long to here? I saw people. We had this bearish breaking structure to the downside, and then we had this momentum candle up, and it failed to break the high, and people still long this bitch. And like, if you did long this shit, right? Your stocks would have been at that low. You actually almost would have caught the move. You would have caught a 0.5. What is the point in doing that? There's 0 points there, right? You may as well wait for price to come into a discounted and then continue up. Okay, and as much as this is bullish, price still has to retrace. Price still has to retrace. So what do I see? See a flat body on the 5-minute. Okay, we kind of trade back in and we come all the way down to here. Now, this time we are now in that discount of the swing. Okay, where's our swing from here to here? These lows to the high. We've hit the discount. As well as that, we have traded into a 5-minute gap. Okay. This is where the confusion comes in. This is where I see people not taking trades and people walked away, and that is absolutely fine. And it was probably the better thing to do, if I'm being 100% honest, right? We have this 15-minute inversion play happening, okay? We have this 15-minute inversion play just here. Now, this 15-minute inversion play is good, but what makes it even better is that we have a 15-minute fair value gap just below, resting slightly below, okay? That we're forming at 10 a.m. open, okay? We're at 9:57. For me, it's 2:57, but for 9:57 in New York time, right? We have this 10 a.m. open about to happen with a 15-minute gap. So what makes most sense, and this is what I was waiting for, if I'm being honest, I was waiting for price to trade back into here at 10 a.m. open, get the sweep, and then long that shit, okay? Now, we didn't quite get that. Why? Because we are one in that 15-minute inversion. But if we take a look at ES, right? ES has come down and hasn't got a 15-minute gap to trade away from. The only gap it's got to trade away from at this point is this 5-minute BPR over here, right? And if you were to be really thinking and just trade the 1 minute, the 5-minute gap, you've got this 5-minute fair value gap just here to trade into. That's the only thing you've kind of got, okay? I'm getting messages about this trade. Yeah, so for ES, it doesn't really need to do anything else because we've had a sweep of these 3-minute intermediate lows, okay, or the 1-minute intermediate lows. I mean, I say 1 minute, it's like a 5-minute intermediate low, but yeah, on the 1 minute, it looks a bit clearer. We have this sweep. ES could take off from here. So what do I wait for? I look at the inversions. What inversion can I trade off of? There's no 5-minute inversions. There's no 4-minute. There's no 3-minute. There's no 2-minute. There's a 1-minute inversion. That's my highest time frame inversion that I can trade off of. Price gives this fat ass candle here, and then on ES inverses. At the same time, we've inversed this gap. We're creating gaps. So what do? I take a long on this bitch. Right there. Retest, and I long that shit. This was my entry just here. Is my trade of 8s because I'm in bar replay. If you look at my entry, just here. Okay? That's why I take my entry. So once I've entered this trade, okay, I'm now looking for price to continue going up. Again, could this low get swept? Absolutely. Am I fine with that happening? Yeah, I'm also on an EVAL. I'm not on a fucking funded account, so I also don't really give two shits. And you got to think about it that way. But as well as that, I'm okay with this happening, and then I have more conviction for this to happen because we've now swept these intermediate lows, okay? And it's a strong intermediate low. It's a 5-minute intermediate low. So I'm okay with that happening, right? I understand we're trading into this inversion. I understand we were trading into this inversion at the time. And this was the most obvious thing for price to do. But looking at ES and the way that ES reacted from this 5 minute and then inversed the 1 minute gap over here, it fits my rules, right? It fits my rules. I have to take this trade. There's no like if buts or maybes. I have to take this trade because it fits my rules. Um, because on ES it fits my rules. I've traded into the gap that I want to see price trade away from. We know we're bullish. Okay, we have all this LRL on ES to target, and then we've had that highest time frame inversion happen. And so for me, okay, I'm ready for this shit to happen, right? So I take the trade, price comes down. At this point, I'm like, yeah, this low, if this low gets swept, just know I'll be back in this trade, right? And then we get this inversion play, we come into profit, we go up. Now, some people I know who took this trade, they went break even at this high. Just here. This isn't a bad place to, oh no, maybe they went break even, no, it was this high. This ain't a bad place to take break even, but where's your context? And it's not the right place. The right place to take break even would be this high here because this is your external swing. This is all internal. So what makes most sense for price to react from? Would price reverse from here and go all the way back down after sweeping this internal high? Or would it make more sense for price to take this high and then reverse all the way back down? This high, not this high. So me going break even here makes no sense. It doesn't make sense because as well as that, on ES, what are we doing? We're displacing higher, but we're also creating these gaps over here, right? So as well as that, we're creating gaps on NASDAQ. So I'm expecting price to trade lower into these gaps and then trade higher. So even though I'm up, if it flushes the high, brilliant. But I'm okay with it coming back down. So that's exactly what happens. Go on 3 minute. ES decides to trade lower. Down here, you can see I'm kind of, I think I entered here, but I got filled here. Yeah, it was a shit fill. I'm at break even, but I didn't close because, again, it makes no sense for me to take break even there. And then we get this rejection block on the 3 minute. And I was expecting, okay, price is going to trade back into it. We inverse this 1 minute gap. Not 1 minute gap. So, is it 2 minute? Yeah, we inverse this 2 minute gap. There we go. Okay, we have this rejection block on the 3 minute, which I've started to test out and really, seems to be working really well. We trade back into it, and then of course we take out those highs just there. And that was the trade of the day for me. And if don't know why it said I bought there. Yeah, that's interesting. I bought there. And then I closed out here. Okay, so that was my trade for the day, right? And it made most sense. It was probably the best, is the right trade to take. It wasn't the best of trades because this low could easily got swept at 10 a.m. open, and I know that, and I've journaled that. But yeah, when price is this obvious, it makes most sense. So in terms of things to learn from this trade, break-even points have to have context behind it. Where's price going to reverse from? Here or here? Probably this high. So break even at this high makes sense. What's ES doing? ES is trading back into 5 minute gaps. Okay. Here. ES is creating 5 minute gaps, it's trading back into it. So if ES is going to come down, NASDAQ was a lot weaker today. So NQ was also going to trade down, right? And it would probably stop me at break even. Okay. So that, yeah. They're the biggest takeaways. And then adapting your bias. Don't marry a bias and just force it. Okay? It's okay to marry a bias as long as that bias is right. And for some people it is. And some people just marry it and it's always right, and that's brilliant. But for some of us, we have to be able to adapt it. I was looking for shorts coming into market open. I was looking for this 15-minute fair value gap play over here. Okay. I was looking for this 15-minute fair value gap play over here to target these equal lows and intermediate lows and things like that. But price ripped through. So that tells me, okay, now we are definitely bullish today, right? We swept these highs. We had no reaction from these highs. We were inversing 5-minute bullish structure at bearish structure and bearish gaps. And so my bias was now confirmed to go long. The only thing that would have made this trade 10 times better was if we swept into here at 10 a.m. from here. But unfortunately, we did not get that, and I adapted to that. And that is what you have to do in these live markets, okay? So another trade recap, another banger. We took so many bangers today, bro. We took this one, and we took this EU short, which was a banger trade. So yeah, a great trading day. So yeah, that is my futures day done. That's my trading day done. I will be uploading more of these every single day, every single time I take a trade. So yeah, fucking take some notes, enjoy it. Let me know if you have any questions, and if you want to book a free discovery call with the mentors at Woke Effects, and learn the strategy that has taught me to do these trades, the mech model, things like that, then give me a message, drop a comment, or check out the Instagram in the description. Thank you very much, guys. Peace.